Good morning. You're watching Daybreak on Bloomberg Quint Live, and I'm Alex Matthew. First, the headlines this morning. Asian markets open higher as investors shrug off US-China trade fears. The market regulator SEBI has lowered expenses paid by investors of equity mutual fund schemes by linking charges to AUMs. It has also barred mutual funds from paying fees to distributors from their books. Roads Minister Nitin Gadkari at the Bloomberg India Economic Forum appeals to banks to lend more support to the roads sector for faster infrastructure development. And Aditya Birla Group Chairman Kumar Mangalam will actively continue to look at acquisitions in the US and in Europe. And finally, Reliance Jio adds the most users in 17 months, staying ahead of competition in terms of subscriber addition. Now let's talk about international markets. Wall Street stocks finished higher on Tuesday as investors viewed the latest escalation of the US-China trade war as less consequential than earlier feared. Strong gains in tech also lifted the broader market rally. Abigail Doolittle of Bloomberg News wraps up all the action on Wall Street in this report.
Stocks rebounded in Tuesday's Wall Street session. Both the Dow and the Nasdaq were up about 0.7%. The S&P 500 up a little more than 0.5%. This despite a stepped-up trade war between the U.S. and China. As for sector composition, most of the 11 S&P 500 sectors were higher. Among the top sectors, tech being helped out by lots of the big, well-known names as trade fears seem to be abating. Apple, Google, Facebook, Microsoft all climbing. The chip stocks did well too. Overall up about 1%, more than 1%. Micron, Intel, and Qualcomm doing well, quite well there. And the top sector, though, consumer discretionary. This despite Tesla falling more than 3% on the day, and a Bloomberg scoop that the company is said to face a criminal probe into CEO Elon Musk's statements about going private and funding being secured. Offsetting that decline in the consumer discretionary space, though, were the shares of Netflix, up more than or nearly 5%, as the company did receive 23 Emmys, a record. Also higher in that consumer discretionary space were the shares of Amazon, L Brands, along with Nike. So when you put together that bullish picture with the fact that the three sectors that were lower, consumer staples, real estate, and utilities, defensive sectors, Tuesday's Wall Street session certainly had a risk-on tone. In New York, Abigail Doolittle, Bloomberg News.
Now, it seems that the trade tensions continue to escalate between China and the US. Here's the latest. China has fired back at the United States after Donald Trump ramped up the trade war with his biggest wave of tariffs yet. The Chinese government said that it would impose tariffs on US goods worth $60 billion. Listen in.
If there's a retaliation against our farmers and our industrial workers, our ranchers, if any of that goes on, we're going to kick in another $257 billion. And that'll be also at 25%. We don't want to do, but we probably will have no choice.
All right, so there's more on the cards with regard to tariffs. You can watch this space for everything that comes up on tariffs and on international trade. But for now, let's take a check on the Asian markets. In fact, it's 7:03 and the Chinese markets have just about opened up. The first ticks are slightly in the red, but that was the picture yesterday as well. And the picture changed significantly over the course of the day. The Hang Seng, the first few ticks there are positive, only 0.1% in the green at the moment, but perhaps a little too early to give you a sense of the direction there. The Nikkei was trading quite positively in the morning. In fact, it was up nearly 1.5%. It is now 1.35% higher. The Australian benchmark was also trading positive. It continues to do so. And the Kospi was trading flat. It has lost a little bit of ground and is currently trading about 0.1% lower at the moment. But with that, let's turn to India and look at what we have to watch out for over the course of the day. Darshan Mehta is joining us to tell you all about the trade setup for the day and also to tell you what's happening about the futures and options space. Darshan, good morning. How's it looking this morning?
Yeah, so basically US markets were strong yesterday overnight. The commodities did well on the LME. Asia is a little wobbly, as you pointed out. Japan's doing well, but the other markets have opened rather flat in trade. And the SGX Nifty is also indicating that, pretty much we will open flat in trade. But the overall trend seems to be on the weaker side. Remember, it's also the Bank Nifty weekly expiry that will happen today because tomorrow tomorrow is a holiday. As far as the ADRs are concerned, not the best of close that we saw as far as the ADRs is concerned. ICICI Bank was down 2.5%, Vedanta, HDFC Bank and Infosys, all of them down over 1% in trade. The only positive that came out was Wipro and marginal gains coming in Dr. Reddy. So overall, not the best pictures coming in from the ADR side. Yesterday, another day of selling, we were down 100 points on the Nifty, but there was much more selling that was seen on the mid-cap and small-cap end of the market. So finally, we are seeing that the broader market did manage to correct significantly. The Nifty PSU Bank was down almost 5% in trade, and the Nifty Bank was down 1.5%. So given the fact that consolidation in the PSU banking space was not liked by the investors, and there was heavy shedding that was seen there. Now, as far as some of the sectors that managed to pull up, FMCG, after almost being down 7 to 8% this month itself, managed to pull up by 1%. But nevertheless, there was traction. The real estate index was one of the worst performers apart from the primary indices. It was down 3% in trade. Now, if you're looking at how this week has panned out in trade, none of the indices are traded with a positive bias. But look at the cuts that have come in. The auto index down 2.5%. And remember, these are just two trading sessions. Nifty Bank was down 2.5%, and the Nifty PSU Bank is down 7% in trade in just two trading sessions. Now, as far as fund flows are concerned, what we're seeing is FIs for net sellers to the tune of 1,000 crores, and DIs were net buyers to the tune of almost 260 crores. So FIs as a whole are net sellers in the market, at least for this month and at least for this year is concerned. What caused the crack on the Nifty? Obviously, the banking space and Reliance. So ICICI, SBI, HDFC contributed negatively. Reliance contributed. Some bit of support coming in from the defensives like HUL and ITC, but nevertheless, weak trading session. We were down almost 100 points on the Nifty. As far as futures is concerned, we are seeing that there was long unwinding that was seen on the Nifty. We are below the 11,300 mark in trade. As far as the Nifty Bank is concerned, fresh short positions were seen. Open interest build up of 25% on the short side that was seen. Now, as far as positions are concerned, still, if you see that at 11,400, 11,500, put writers are still active, and if the Nifty manages to stay at this level, there will be more selling that will come in. Call writers taking their positions to build up positions and bring pressure on the downside. Yesterday also, what happened was that call writers wrote in because their premiums are getting cut and they are making money, and put writers, the premium are writing and they're losing significant amount of money. So from 11,300 right up to 11,700, you can see that put writers were selling in trade. So it's a very, very weak sign that we're seeing at this point of time. Adani Enterprises is there in the F&O ban. Balrampur Chini comes back in the F&O ban. It was down almost 11% in trade yesterday. As far as the PCR is concerned, the Nifty PCR managed to cool off. The Bank Nifty PCR also managing to cool off. It's come out to almost 0.58 at this point of time. A couple of stocks that I want to point out. First of all is Indian Bank. Fresh shorts were seen on open interest build up of 38%. The banking stock across PSU banks were weak. Even Bank of Baroda saw open interest build up of 14%, was down 16% in trade. A little bit of short covering that was seen in some of the FMCG names, and that was HUL. So open interest down by 1.5% on the short covering side. And the second one was Jubilant Foodwork, managed to move up 2% on high short covering that was seen. Open interest was down 7% on the counter.
In fact, Darshan, while we were talking, the Hang Seng and one of the Chinese benchmarks has turned positive. So we'll have to see what happens with regard to Indian Open. Thanks so much for that, Darshan. Let's turn and shift focus to commodities, and Jesh Khilani is joining us with updates there. Jesh, I believe there's an update with regard to a particular level that the Saudi or that Saudi Arabia is comfortable with.
That's right, Alex. In fact, they have mentioned that $80 a barrel is just as fine that they are expecting. And on the back of these comments, we did manage to see a rally in the WTI prices as well. That surged about 1.4% overnight. However, if you look at what's expected from the inventory front, API is likely to report an inventory buildup of nearly 1.25 million barrels for last week. Now, in case that happens, this will be the first rise in inventory levels that we have seen since early August. So we'll have to wait and watch. On one side, we have positive news in terms of the comments that have come from Saudi Arabia, while on the other hand, we're looking at the first inventory buildup. But shifting focus to the base metal space, that in fact snapped its two-day fall as far as the LME base metal index is concerned. Most of the base metals on the London Metal Exchange saw a smart rebound, except for tin, which ended negative. So copper rebounded on the back of speculation of demand growth. That was up more than 2% and was the top gainer in trade. We had the likes of zinc and nickel, which gained more than 1% each. And we had aluminium and lead, which also advanced on the London Metal Exchange, while tin closed negative for the second straight day. Lastly, if you look at gold prices, in the recent past, we have seen that they have been stuck in a very narrow range near the 1200 mark, so awaiting more cues over there.
All right, thanks so much for that, Jayesh. Now, Aditya Birla Group Chairman Kumar Mangalam Birla is not interested in making acquisitions outside the sectors that the group is present in. He lists out his rationale for making acquisitions in this conversation with Haslinda Amin of Bloomberg News.
We announced an acquisition of an American company headquartered in Cleveland called Alaris, again in the space of aluminum rolling. That actually bolsters our position in that space even further as the global leader. That requires CFIUS permission because they actually supply to the aero industry. So from a defense point of view, they require CFIUS permission, which goes right up to the president, I believe. I don't think that this would work against us. I think that we're very confident from whatever we've heard from consultants there, from people at CFIUS, that he or the dispensation should be positively inclined towards an Indian company making an acquisition of this kind. So I feel very sort of positive about it. I don't think that there should be any negative impact on account of that.
Are you looking at more M&As overseas, and what's looking attractive? I mean, the US could be attractive right now.
So our M&A activity has been very specifically focused around business rationale. So either you're getting into a new market, or you're backward integrating or integrating forward into value-added products. And the basic question for us for an M&A, for making an acquisition, for example, is will this add value? Given the fact that we are a global player, more than half of our revenues today come from overseas, we're very comfortable operating anywhere in the world. And I think
looking for M&As right now?
We're constantly looking for M&As. We're constantly looking for M&As.
In the US, in Europe?
Both in the US and Europe, as also in the country here in India. And I think that if you have an opportunity which we believe is value accretive, fits in with our overall strategic architecture, we would be very comfortable and happy to look at an opportunity. We've made 35 acquisitions in the last 2 decades. So I think integrating acquisitions into the company is something that our teams have learned to do pretty well.
And I know that you have more than a 90% success rate in terms of consolidating. I'm just wondering whether you would venture outside of the sectors that you're already in. Might you do that for growth?
So that's unlikely. I think that what we have done always is follow the philosophy of growing in overseas markets, or foraying into overseas markets for the first time in sectors that we are familiar with and that we are present in already. I think it's unlikely that as a philosophy we would go into a foreign market with a business that we don't know anything about, and that's completely new to us.
All right, that's the word coming in from Kumar Mangalam Birla. For now, let's turn to Soumit Sarkar, who's standing by with the big brokerage calls of the day. Good morning, Soumit. What are you picking up?
Good morning, Alex. On the big brokerage calls for the day, first we have is Nomura on JSW Steel. Now, the brokerage has initiated coverage on the stock with a buy rating and a target price of 484, which suggests a potential upside of nearly 19%. Now, according to the brokerage, JSW Steel is a leading play on Indian steel revival. Now, Nomura is expecting the Indian steel demand to grow around 5 to 7% over the next decade on the back of large-scale infrastructure spending and consumption growth. Now, for JSW Steel, a combination of cost efficiency and timely capacity expansion would drive the profitability growth for the company going forward, according to the brokerage. Lastly, the brokerage also expecting that the company's balance sheet would remain strong and its liquidity position would also remain strong despite the heavy capital expenditure plans that the company has in future. Second, we have is Axis Securities on Sheela Foam. Now, the brokerage has initiated coverage on the stock with a buy rating and a target price of 2,039 rupees, which suggests a potential upside of nearly 22%. Now, strong brand awareness of Sheela Foam among consumers would give the company a competitive edge over its peers, says the brokerage. Now, product expansion, introduction of low price products and using its capabilities to develop high margin products are all positives for the company in the future. Now, the company also has heavy capital expenditure plans. It is planning to set up a new plant and is also going to invest in its existing plants. And these capital expenditure will be supported by the strong free cash flow generation of the company, says the brokerage. Lastly, the brokerage expects a fall in the major raw material prices, that's TDI for Sheela Foam, and on the back of this, it is also expecting the company's EBITDA margins to further expand going forward.
All right, thanks so much for that, Somit. Now, Road Transport Minister Nitin Gadkari is confident of the BJP winning the 2019 polls owing to a slew of welfare schemes that were launched by the Narendra Modi government. Speaking to Unni Krishnan of Bloomberg News at the Bloomberg India Economic Forum, Gadkari refuted any possibility of him becoming Prime Minister in 2019 and expressed his complete confidence in Narendra Modi winning a second term. Listen in.
I am confident the performance of our government, our schemes are successful. We are transparent, corruption-free, and development-oriented. We have taken a lot of decisions for reform, and our scheme like Pradhan Mantri Jan Dhan Yojana, from 3 crore to 32 crores, bank accounts are open. Now we are converting post into the post bank. This is a great thing. Now we have a health insurance scheme for all poor people, 5 lakhs rupees, they will get the benefit from it. We have a lot of good schemes. Pradhan Mantri Awas Yojana, we are giving shelter to lakhs of people in rural and urban area. So individual benefit, when in Ujjwala Yojana, we are giving gas cylinder and Segadi for 8 crore people. We are giving electric connectivity to all the poor people. So because of this all welfare schemes, the way in which the poor people are benefited, the way in which the economy is growing, I am confident that the people have faith on us under the leadership of Prime Minister Modi ji, and I am confident that we will get good victory in the next election.
And also, part of the reason could be India becoming the fastest growing economy, 8% growth. And like you were earlier telling me, a large part of it, or a third of it has come from roads, which has been under your ministry. Do we see you in an expanded role or a more different role in the next government?
No, I am happy with my job. I always feel that politics is the instrument of socio-economic reform. And when I was minister in Mumbai, in Maharashtra, I got approved to construct Mumbai-Pune Express Highway, 55 flyovers, Worli-Bandra ceiling projects. And that's the reason I am happy with these jobs. Now the river connectivity is my dream. At the same time, clean and Aviral Ganga and Nirmal Ganga is my mission of my life. And it is really a great thing, it's touching to my heart. So the Jalamarga, the inland waterways, is also a mission for me. Now the seaplane, catamaran, hovercrafts, amphibious seaplane, buses, these are my dreams. I am working on it. And I feel that I am happy with my jobs. I am here and I am trying my level best to give good results to the government under the leadership of Prime Minister Modi ji. I don't have any more ambition about it.
Yeah, you talked about your journey from Nagpur to Bombay to Delhi, and it seems that you've always been open to challenges. So should a situation arise for you and you get an opportunity to become the Prime Minister, would you be open to it?
No, I never get that opportunity. I'm not interested, neither I'm seeing any dream for that. Okay. The Modi ji is going to our Prime Minister. We are all with him and we will support him. And I'm confident that in next election he will be our next Prime Minister. We don't have any doubts about it.
All right, that's just a slice of the conversation that was had with Mr. Nitin Gadkari. For the entire conversation, you can log on to the website bloombergquint.com. Now, the SEBI board took some big decisions on Tuesday after its board meeting. In fact, several announcements were made, and this has paved the way for lower mutual fund expense ratios as well, and a larger purview of the consent clause. Payaswini Upadhyay wraps up the big decisions for us.
Well, let me take you through the top 5 key highlights of the SEBI board meet on Tuesday. The first one is in the context of the infamous April 10 circular, in the context of foreign portfolio investments and the KYC requirements. Now, remember, the HR Khan committee had recommended several, changes to that April 10 circular. Those have been largely accepted by SEBI, but what specifically those changes are, we'll have to wait for the final circular. But what the the SEBI chairman indicated is that the beneficial owner concept that was brought in the April 10th circular will be applicable only for KYC requirements and not as to the restrictions on the ability to invest in the Indian market by FPIs or NRIs. But yet we have to wait for the final circular on this one. The second important decision that SEBI has taken is to reduce the time period for listing of issues from the current T+6 days to T+3 days. Broadly, this was an ask by market participants. SEBI has also said that the UPI or the Unified Payment Interface will also be used in this process. How that process will work is yet to be announced by SEBI. The third important change has to do with the changes to SEBI's prevention of fraudulent and unfair trade practices regulations. In here, SEBI has expanded the scope of its regulations to include employees and agents of employees. These individuals currently in the existing definition were arguably out of the purview of the regulations. SEBI has also strengthened the definition of fraud to include activities such as misleading information on digital media, and some of the experts we spoke with said that this is to target exchange of information on listed equities on platforms like WhatsApp by people who may not necessarily be market intermediaries but play an important role in the market. SEBI has also amended its prevention of insider trading regulations to include who unpublished price-sensitive information can be shared with for legitimate purposes. Currently, this legitimate purpose was not defined under the definition, and the press release indicates a due diligence kind of situation as a scenario where such sharing of UPSI may be merited. They've also indicated that there are going to be additional defenses when trading in possession of UPSI, and companies will need to lay down a code of conduct and internal controls when they share their UPSI. Again, details on those will be forthcoming once we have the final regulations with us. The fourth change SEBI has made is to its delisting regulations. Currently, the price that was arrived at through the reverse book building process was the final price. SEBI has now said that the promoters don't like that price, they can give a counter offer to all the shareholders. The final change that SEBI has made is consent mechanism. The committee had recommended that egregious violations like insider trading or fraud or front running may also be included in the consent framework, which currently aren't. What SEBI has said that any alleged default that causes huge market-wide impact or affects the integrity of the market, and that will be the yardstick that will be used to assess whether an offence is consentable or not. Again, the details of that will be clear once SEBI publishes its final regulations. Back to you.
All right, several announcements there or moves there by the SEBI, but one that has obviously caught my eye, I'm sure it's going to catch a lot of your ears as well, and the fact that expense ratios are likely to come down for equity mutual funds schemes with mutual funds and asset management companies. Let's go over to Nikki Mirchandani for the stocks in news. I'm guessing some of them are going to be affected by this latest update. Nikki?
Well, hi. HDFC AMC and other AMC companies are expected to be in focus as the SEBI has cut the total expense ratio for the mutual funds. A lot of brokerages have said that this could lead to a 25% earning impact on the sector. Also, we're tracking MCX this morning on back of the development that says SEBI says that the company has taken the first step to open to a commodity derivative market to foreign investors. That's a positive development for MCX there. Sun Pharma, again, a positive. The company has received European Commission approval for antibody Ilumetri by Almirall. So that's again a positive coming in on that pharma counter. KIOCL, a buyback announcement there. The company plans to buy back around 2% equity of the company at a price of around 170 per share. Now this buyback price is at least a 25% discount to the market price that we saw in the previous session of trade. So we're expecting some kind of negative development, a negative reaction traction on this counter, and also we're tracking in ILFS Transportation Network, the subsidiary of the company, which is the Moradabad Bareilly Expressway. It's expected to receive a claim of around 425 crores from NHAI on account of the losses that the company has suffered of cost overruns for the development of its projects.
All right, thanks so much for that, Nikki. Now, you've all heard of Tesla, and it's been in the news for all the wrong reasons of late. But even in its core segment, it's facing competition in the luxury electric car market from Audi, Mercedes, BMW, Jaguar, and Porsche. Bloomberg's Emily Chang reports.
Tesla customers are getting anxious.
I noticed it's popping up on Twitter quite a lot. Where is my Model 3?
And while Elon Musk promises to deliver,
we're building the cars as fast as we can.
The company is facing new competition in the luxury electric car race. And it's not just coming from within Silicon Valley. Instead, a raft of traditional luxury manufacturers are targeting Tesla, and one of them in its own backyard. Audi used San Francisco to launch its e-tron, a battery-powered crossover that's due to hit showrooms by the end of the year. With a price tag of $75,000, it gives the Model X a run for its money.
We want to merge the new world of electric mobility together with 100 years of experience of manufacturing premium cars.
BMW, too, is vying for a slice of the market and showed off its concept car this month. While the world's largest maker of luxury cars, Mercedes, has announced its plan to develop a range of vehicles for its EQ electric line, with more than $12 billion already invested in the project.
We started investing early in electric mobility, and we believe the times and technology are now ready for the very first all-electric SUV from Mercedes-Benz.
And we can expect to see more high-end rivals enter the market, with some analysts saying the EV industry could be worth $567 billion by 2025. But car makers don't just need to meet shifting consumer tastes, they also need to meet increasingly stringent emission standards. Some countries, like the UK and France, are working towards banning combustion engines altogether in coming decades. Emily Chang, Bloomberg, San Francisco.
All right. Well, there's clearly lots to talk about over the course of the day, and you'll find all the live market action right here on Bloomberg Quint Live. There are also several stories on the website that are currently available that you should check out. First up, the Supreme Court on Tuesday asked Russia's VTB bank-promoted New Metal to establish that there was subterfuge by rival bidder ArcelorMittal in divesting its shares in two debt-ridden firms before bidding for Essar Steel. And a billionaire, Jack Ma, has sent out a grave warning regarding the trade war between the US and China is going to last longer and have a bigger impact than most people think. According to Ma, China's richest man said the dispute could last 20 years and persist beyond the Trump presidency. Well, that's a wrap on this edition of Daybreak, but all you need to know is up next, so do stay tuned. This is Bloomberg Quint.